Good evening and welcome to the LFT for 11. What's the date today? Forgot already. 17th of April. So we're doing it today because tomorrow is a holiday. So hopefully you'll have 3 nice full days to sit and break your head about what we discussed today and look at any potential trades that you may want to take for the next week and thereafter. Okay, so we'll start with the global charts. It's not in the same way that I do it on Metastock, of course, but it will give us the bigger picture that we need. So you have Dow Jones on your screen, and what you can see is that right from this year beginning, 16,500 has been a pretty significant resistance. So as we speak, the Dow Jones is about 34 points down, nothing great on our day-to-day basis. This is a one-year chart, and essentially 16,500 becomes a very significant resistance for the Dow Jones, and we can now say that at the very least the Dow Jones is going sideways, and the uptrend that was there, say from October last year to Jan of this year, has more or less come to a sideways movement now. Okay, that's the Dow Jones. If you look at the S&P 500, then also in a sense the same figure, the same picture. At around 820 there is significant resistance that is being faced on the S&P 500. And then we have the S&P, sorry, that was the S&P 100 I spoke about earlier. And as I click the S&P 500, you can see that they're more or less virtually the same. So there's really nothing more to say on the S&P 100 or the S&P 500. The Russell 1000 and the Russell 3000, I look at these because these are very broad indices, and you can see that on the so the triple sort of double or triple top that you saw on the Dow Jones or on the S&P, it's not so visible there on the Russell 1000, hinting that some more upside might be there. But in the March-April time frame, you do see that you have, narrower triple tops at the 1050 level on the Russell 1000, and on the Russell 3000 that you're looking at now, it's at around 1125. Okay. So the uptrend from, let's say, the second half of last year on the American markets is not over, but definitely maturing, and different parts of the markets are, some are clearly at tops like the Dow Jones and the S&P, while the Russell 3000 still seems to be having some upside left. So like we've discussed in Dow theory, when indices sort of go out of sync with each other, they tend to give you a hint about what's likely. So the reading right now, the inference would be that for now, the next few weeks might not see much of an up move in the American markets, broadly speaking. Coming to Europe, so here is the FTSE, and this is the FTSE, which is 27 points up, and this is a one-year chart, and you can see that over the whole 1 year, broadly it's been range bound between, let's say, 6,400 and 6,800, and as of now it's very much within that range, and there's nothing on the FTSE markets to say that there's an uptrend at all. If anything, it's just a sideways trend. And on DAX, virtually you have an index which is like the American indices, so you have a clear triple top within the last 3 to 3.5 months, 4 months, which has been formed. So clearly not much upside to be expected from the global markets, right? I guess that's clear. Are there any questions on the global markets? Please ask them now. Yeah, so let's close that, save some memory space. Okay, so now coming to the Indian market. So the quick global overview is that we are not expecting much of an upside on the Indian on the global stocks. Coming to what's happening in India. So we have the Nifty here on screen updated till today. So wonderful rally, 100 points up after a sort of lackluster start and 2 days of some concern, and has gone up, but has gone up on less than average volumes. So that is one thing to keep in mind about. And the other thing to keep in mind about is the fact that for those of us who understand technical indicators, you have an MACD negative crossover. So there are two things. One, it's still in the positive zone, it's in the +0 level, but you do have a small negative crossover on the MACD. So for now, the high of 6,823 is something we should look we should look at as probably being held for now, and there's really nothing else to look at right now. What Balki? RSI positive reversal. Why would you say that? You want to elaborate? Okay, and so what inference do you want to make from that? Because you're talking about the Nifty making a higher low, right? So if you're talking about the Nifty making a higher low, then I wouldn't agree, because here this is where the Nifty made the low yesterday, and this is probably the reference point that you are referring to. Okay, so if we were to, this is the RSI, and this level, and that's where it closed March 24th. Okay, if you're doing March 24th, then how is this a reversal? You have this low here, and you have a lower low there, and you're talking about this as the higher low. Okay, but March 24th to now is more than, so what's your settings for your RSI? Because mine is a 14-day standard RSI, and this is so you're looking at what, towards almost the end of the 28-day period. You're looking at 24th March, and we are on 17th April, so that's already how many days? 21 days, and it's coming towards the edge of that. So I wouldn't give too much what do I say, weight on that. Okay, all right, good question. As for those of you who don't know indicators, that's fine. At some point in the future, I'm sure we'll get it discussed. Okay, all right, so certainly there is bullishness there in the market. Nice up move today, but but the MACD is something that just for Balki and everybody else's information, MACD is something which gives you more of a positional view. RSI, in my opinion, gives you definitely a shorter term view than the MACD. So with the MACD negative crossover, and even if we take that RSI positive reversal that we spoke about, I would say that at the very least they would cancel each other out. So maybe you'll see more of an upside, small one right now, but 6825 is definitely the level to watch. So no shorting of the market, but on the other hand, should you go long, that is something that on the Nifty at least should happen only above 6825. Till then, no going long. And if there's anything else that we need to be aware about is that it's not really gone up on higher volumes. At best, it's gone up on average volumes, maybe a little below that. So the Nifty, I would say, is probably going to test the 6825 levels, and then thereafter we need to review the market. Any position that you take is probably valid till the next 2.5 weeks, till the election results come out, and a lot could change once the results are out. Okay, so that's the view on the Nifty. Sideways to uppish is my position right now, and if there is anything, then you have, it's definitely not complete, then you have this sort of level to watch out for. And if it comes back down, then I think everybody is very clear about what that pattern is. It's a mild head and shoulder top. So left shoulder, head comes down, you get a right shoulder, and then the breakdown so could come down to 6,500. Like I said, or to emphasize, the trend is definitely strongly on the bullish side, and this is a minor reversal over just a few weeks versus several weeks of a uptrend. So something to note, and your neckline is at 6670, let's say. Okay. And should that break, then I think 6,500 becomes a distinct possibility. Okay, so that's the view on the Nifty. Let's now look at the sector indices. So on the sector indices, so this is starting with the Bank Nifty. So the Bank Nifty has really not been able to climb back to its life high, and as far as charts are concerned, it's more or less looking like the Nifty in the short term with the potential head and shoulder formation. This is, so I'm emphasizing the word potential. It is not a head and shoulder yet. It could, however, evolve into one. So next week should probably give us the answer on that. So the Nifty again, the Bank Nifty also sort of in a sideways range between 12,500 and 13,000. Okay, so looks like a good number of the sector indices are all probably going to have the similar picture. So again, the BSE Auto almost back to its life high, but again some that level of 12,625 is something to watch for. Okay, consumer durables not there in the Nifty, so we'll skip that. This is the capital goods index. So taken support very nicely at this 11,840 levels, a line that's been there for some time, and it's one sector which has a long way to go back to go back to its life high. Last 2 weeks back, I think, when we did the LFT for the first time this year, we said head and shoulder broken out, big move, not yet, but approximately met measuring implications, could get a correction before the next up move starts. Okay. FMCG showing distinctly better strength actually than the rest of the sectors that we have seen, which is honestly to me a little surprising, but all said and done, well, that's what we have on the chart, and last time I think the review was, FMCG may not be the best place to get in. Maybe we need to relook at that point of view. Okay. Healthcare clearly going sideways, head and shoulder over 3-4 months, still in the works. As you can see by the size of the candle today on BSE Healthcare, not as strong as what you have seen on the other sectors. Metals, okay, almost the same picture, showing definitely some strength. I would say range bound for now between 9,840, 850 to this higher level of 10,700. I really wish some of these indices could be traded, but unfortunately they are not. Okay, so the BSE Power Index has broken out. Okay, so as you can see, this is right from the time it has been conceived in 2011 and now has broken out of a long-term downtrend line. So this is definitely a sector to look at, might be the one to give us some significant returns in the months ahead. So you're having small corrections, and clearly you've got higher tops, higher bottoms. Again, MACD negative crossover, etc. Maybe short-term weakness, but long-term there would still be some bullish strength left. Public sector units. So again, this is one more index which has broken down 4-year, 3-year, 4-year downtrend, might be on its way to significantly higher levels. However, this could be tested later before the trend line, could be tested later before we get further up moves. Okay, so reality, big red candles mostly on account of DLF. DLF is the big heavyweight in reality. Okay. So went to that 1600 zone and has come back down. At this point, I would not expect reality to go below this support, which is at 1375. So today a small bounce, definitely not enough to remove the bearishness of yesterday, or definitely for day before yesterday, but you may not see it go below the 1375. We'll, as usual, keep reviewing that. That's it, I think. Okay, there is CNX IT we need to look at. Okay, so CNX IT clearly after the correction in March has really not done anything, has gone sideways. So we now have some of the biggies that have given the results, and there seems to be a differentiation going on in the IT space, with Infi struggling versus TCS and maybe HCL Tech still able to grow and give results make the market happier. Okay, so more or less what would I say, a lackluster market. Certainly I would think that there are limits to how far up the market could go. On the other hand, there is no significant signs that the markets are going to correct at all. A theme that we have been discussing for 2-3 weeks now is selling options in order to eat time. That is, I think, still the way to go, and I think all the sector charts, including the Nifty, and then you have the big daddies of the world, which are also not really showing any directional movement. Okay. On the VIX, if we have to look at it, where did it go? Okay. Okay. So this is the VIX. Just hold on. Let me explain what you're seeing. So you're seeing two lines. One is this is the VIX itself, the green and red, and the brown line is the Nifty. Okay. So what you need to concentrate is on the. Let me make this thicker. All right. So this has basically come to the higher end of its zone. So it is at the 31.9 level, and that's pretty high volatility that you're seeing. And as you can see that right from 2009, so 2009 was largely the recovery, and then after that it sort of stabilized, and the VIX has basically gone from a base of generally 13.7 to its highs of 31.9. So not much more volatility to be expected at this point, and unfortunately, since we do not have VIX going on to before 2008, we don't know what it does actually for a much longer period of time. The only thing is events. So 2009 here, when the UPA2 elections came out, you had this huge VIX at 60, 70 levels, and then of course on the crash on the way down you had that huge VIX. You can't really take that as a benchmark because those were extraordinary times. The word extraordinary simply means not the usual, nothing else. So you had the great crash, and then you had the huge UPA2 thing. So those can't really become a reference points. What happened from 2010 onward, let's say, a more normal, a more predictable market, and it's come to the limits of that. So now that elections are over, I hope all of us voted. I did, and we definitely go into the wait and watch mode. But if we look at the VIX, the wait and watch mode is also associated with now pretty high volatility. Not an ideal situation to be in. Definitely higher risk. So volatility or higher VIX simply meaning that you can get both. You can get bi-directional moves, both which are up or down. So the VIX is not telling us anything except that it's at its high level, and therefore we should expect higher moves as of now. Having said that, the VIX today, which typically happens when you have an uptrend, cooled off a little bit, but nothing really significant. Okay, so expect volatility, and if one is tracking the VIX on a regular basis, then maybe it settles down in next week, and then goes into a sort of sideways phase till the election results are announced. So the market basically calms down. Okay, so this is, remember, the VIX is generated from Nifty options mostly, and this is for the Nifty, not so much for individual stocks. But of course, the argument that Nifty itself is composed of individual stocks, then some stocks, not all stocks, some individual stocks should be expected to have high volatility and others less. Okay, so is there any other opinion or any other piece of information that anybody has? Will be great. So I'm moving forward with the assumption that with the analysis that we have right now, the expectation is mostly a sideways market, and we are not really seeing any directional moves. Stock specific, yes, but probably not on the Nifty. Okay. So we now move into the individual stocks, and we'll start as usual with ACC. Okay. So ACC, as you can see, after a 2-day correction, where it's basically not been able to cross 1400, has gone up from this known support level of 1320, and also you have the 21-day moving average there. So ACC has gone up, but I would, till it breaks certain higher levels, I don't think we can expect much higher moves. Also remember that next week is a truncated week. Expiry is happening on Wednesday, and tomorrow is of course a holiday, so you have only 3 days of trading: Monday, Tuesday, Wednesday, and with expiry on the way, probably not much could happen, unless of course there's some specific news or event relevant to a particular stock or a sector. Okay, so as of now, ACC I would think is range bound, and only till it breaks this low of 1318 can one expects to see any move on ACC. However, if there is a move, please remember that there's significant price action at this level of around 1260, 1270, and like I said, be prepared for bidirectional movements. Okay, so very unlikely it's going to move above 1420. So if there's anything to do is to look at the call there and write that call. But again, I'm talking about the April series, so there's not much time left to write options. You have to do it on Monday, probably earn a few $100 at least on the various options that we might find, but not much more than that. Okay. Ambuja Cement, much closer to the life high, and in terms of a bullish candidate, probably better than ACC. In terms of the way it seems to have moved, there's more steam left in Ambuja Cement than in ACC. I would look at if anything being long on this, and you could do something like a horizontal bullish spread where you go long on 220, 225 May call and short the near month to reduce some costs. It's not going to make much of a difference to your cost reduction, so you have to see whether that horizontal spread strategy works with so little time left for the near month. I'm not expecting it to go below 206, but once it crosses 225, then it'll probably go to 250 and much higher quite fast. There's some news about the merger of some large cement companies, and of course they all say it's good for the market, but that apart, if those mergers happen, then usually it directly means better pricing power, and therefore on a fundamental multi-year basis, the cement sector might undergo a re-rating upwards, which means that some of these stocks could be at much higher levels. While I'm at it, let me just finish off Ultratech Cement so that we have all the cement stocks in the Nifty done. Okay, so Ultratech Cement made a new life high at 2278, and then has just cooled off a bit marginally. The last part of the up move clearly on lower volume, so probably becoming tired. So in the short term, not expecting anything above 2300, and if it comes to say 2100 or thereabouts, you could look at potential longs for now, but that is something to be looked upon later. If I look at short-term supports, then that's the level to watch out for. So we'll leave that on the chart there, and review it as it goes by. Buy on dips is the approach on Ultratech. So all the cement stocks, bullish bias with a short-term neutral view. Okay. Then looking at Asian Paints, so this one is clearly going sideways. I don't think anybody has any doubt. That's your level this side. Okay, so watch for that level. So you have a clear ascending triangle which you can see on on Asian Paints. Nothing in the volumes particularly, though they are below average. So tough to say what could happen. Please remember this could break out in both directions. So basically between 550 and about 530, a 20 rupee move that could happen. So this could either go to new life highs or cool down to about this level, which is at around 525. So again, have to just wait and watch. Might be if somebody has got quickly in parallel as we do this their option chain open from NSE, then maybe we can do a very quick options review. But I expect 560 is going to be a significant resistance in option chain, and around 520 could be a good sound support. Axis Bank clearly going sideways, absolutely no direction at all. As a matter of fact, whatever we saw in the Nifty with possible minor head and shoulder in formation is what you're seeing on Axis Bank. Remember that pattern was also visible in the Bank Nifty. Okay, so that is Axis Bank. Sorry, I didn't mention the levels. 1400 downside, strong support. 1500 upside, good resistance. Yeah, that's all one has to watch for. Bajaj Auto, so this is looking a little bit weak, has gone up but is not showing the strength like we saw in cement or banks. Some weakness there, would not expect it to go above 2050. As a matter of fact, if it breaks 1950, one could even look at 1900. Okay, Bank of Baroda. Looks like this is going to be a pretty boring LFT. Again, you have the left shoulder, head, potential right shoulder. Look at this. What do you do in a situation like this? So good live discussion here. You have sort of not, this is strictly speaking not it, but just to get the terminologies across. You have a short shooting star here. You have a sort of a continuation, a shooting star there, and then you have a sort of hanging man here, and then you had a sort of hanging man here. Or you can call them spinning tops. Now whichever way you look at it, is mostly indecision in the market, and like we keep saying, if the market is undecided, how can you be decided? So absolutely no question of having any clarity on this point. 800 is clearly the resistance on Bank of Baroda, and 750 is the support. It's only after one of these breaks that one can review. Writing the 800 call, or to be a little safer, the 820 or 825 call, whichever strike is available, will probably be a good idea. Given that there's overall weakness on the Nifty, global market, sector indices, etc., writing puts is certainly a higher risk at this point, though one could consider it if one is quite sure about the sideways nature. Bharti Airtel, so not hit. It hasn't reacted last 2 days the way rest of the markets have, showing therefore some sort of relative inherent strength in this stock. But having said that, also you have a lot of candles, or the last 3 sessions are candles with relatively longer shadows compared to the body. Therefore, some minor fight, I would say, going on between the bulls and the bears, and again on lower volume. So just wait this out, write this out clearly sideways. If there's anything, you should be writing higher calls and lower puts from the current market price, 2-3 strikes away. Balki asks, are there any strategies for May options for any stocks? Broadly speaking, I would say that if you're looking at any strategy for May, it is perhaps, so I would divide May broadly into 2 parts. One is the till election result, so say 16th of May, and then after that whatever there is. So any strategy that there is for May basically involves looking at 2 things. Broadly speaking, I would put them in 2 broad categories. One is you are more or less sure of the analysis, technical, fundamental, etc. Suggests that the market is sideways, in which case you can write strangles till, again, very important, till 16th of May. But again, you're not going to get great time expiry because this is the early part of the contract, of the new contract, so poor term value benefits in your end. Or you feel that there is some directional move, then one waits till expiry is over on Wednesday and then review whether the directional opinion in any stock continues to remain strong, and if it does that, then I think you can go ahead. Having said all that, the thing is that LFT is mostly concentrated on shorter term investments from a few days to a few weeks at best, but from an investment perspective things could be very different. I would lean towards the opinion that as the markets come down, as in when they do, fundamental investing from a multi-month, 2-year perspective could become something that could turn out to be of low risk and definitely decent returns in the 6 months to 2 years going ahead. So I hope that clarifies the question, Balki, and everyone else. BHEL, okay, so went down, and it's a stock that we've been discussing quite a lot. So 200 is clearly a good resistance, and 170 is going to be some terrific support. You have both the 100 and the 200-day moving averages here, so don't mess with it, right? Where is it? Yeah. Okay, so multiple moving averages at 170 zone, not something that is likely to be given up easily, and it could take 170. So if one wants a directional view, or not that one is asking or anything, but just connecting it to the question that Balki raised, I would say from a directional perspective, the multi-year downtrend line is going to be an extremely strong support, and I do not expect it at this point to break below 164, 160. So I would say one could potentially look at going long for May on this. Again, the big caveat being that the election results could really make things move in very different directions. Okay, so BHEL, to be more specific on the levels, I believe that there's been a significant or sustainable enough breakout in March associated with decent volumes, and this is a correction of a positional nature with the market potentially could go down to 160, but right now those chances seem small. BPCL, well, I would say this is showing strength, and again slightly lower volumes but overall still bullish. If there's a stock that we've discussed so far that I would say buy, then this is one to clearly look at. I'm not sure why the 50 paisa price hike was not announced last month. So that's now, we're coming to 1st May very soon, and they should start again. Of course, the rupee at 60 plus minus 50 paisa really not doing anything much, but like I've been saying, I think there's a theme here, there's a story here for those of us who are looking at positional stuff, that this could create new life highs, and I would look at least 500 in the next few weeks. Okay. On BPCL. BHEL, Balki says, bounced from the neckline of the head and shoulder. Tough one, because then one is saying that that's the neckline, and of course it very well could be. So very small left shoulder, head, and then we could definitely say this is the right shoulder. The problem with this is somebody could say that this is also another neckline. Okay. That's a close, that's a close. So it's like more like a best fit line. So way to resolve this would be, let's put okay. So if you were to put a line chart, okay, then from where would you, if you say this, then that. Okay. So yes, it has bounced from the head and shoulder neckline, and therefore all the more reason, one more body of evidence to suggest that the markets could go up. But again, this needs to clear the 190 level to be more confident that this neckline is going to hold. Okay. BPCL already discussed. Write the lower puts at around 420, 430, and if anything, buy the calls or just go long on spot/futures. Okay, in India, right? So nice consolidation, and it has just taken off and has come to this 367 level without any rest at all. So little worried in terms of buying into a steep up move like that. When could the correction come? But the levels are very clear. Once 367 clears, then 390, 400, and then 401 or 400 basically become very good possibilities. Slight pickup in volumes in the last 2-3 weeks. Therefore, absolutely no shorts, only longs. So you can write puts at 350, 355, and or I would say wait for a sideways 1 or 2 days correction at least, and then go long on in India. By the way, something that needs to be tracked is our event calendar. So this is the time annual results are coming out, and we must keep on top of when the results are. Okay, Cipla. So pharma index was sort of going sideways. Cipla holding on to the 395 at the bottom here, very tenaciously, and on the other hand, on top 410 is definitely a strong resistance. So 395 below, 410 above is what we're looking at, and really no, I would say, reason to do any trade on this. If there is a trade, then the one I would like to go for is probably BPCL long right now. Coal India. So Coal India has been able to climb above the 286 level, significant multi-year supports. Okay. Only thing is not on great volumes, so expect I would say a small correction first, but then that last 2 days could have been a correction in itself. So 286, so this is something that I might consider for May. 286 or 275 to be good supports, and once it clears the 296 mark, then it's going to definitely go much higher, all the way to 320, 325. DLF is something that we've been paying a lot of attention to in the mentorship program. So clearly broke down from this trend line on Monday. Okay. Well, Monday? No, sorry, Tuesday. And then yesterday, well, you know, if you read the newspapers, they're all saying CPI, the consumer price index, and the WPI, they have gone up, and therefore all these so-called interest rate sensitive stocks have come down. But you don't see that on the bank Nifty, you don't see that on the Axis Bank that you saw so far. So I'm not sure that's, you know, you'll always find reasons for why a move happens. I'm not so sure that it's because of CPI that DLF has fallen. Keep one thing in mind, and this is something to track, that on this day when it attempted that breakout, it happened on good volumes, but after that volumes have just come back to normal. Okay, so today's move, market related, in terms of market went up, this attempted to go up, but definitely no strength in it, and these two you know, sort of falling on its own weight. So 155 for now is the place to watch, and for the long-term investors, the real place to watch will be the 135, 140 levels. So here it made higher tops, higher bottoms, but of course here it went sideways, and then it broke down that sort of tentative symmetrical triangle, but did not go back all the way down to 120. So 156, 155 is the level to watch. If it does break, then I think a quick shot to 150 is something that, or even 145, that could happen. But beyond that, I am of the opinion that this becomes a more a bullish thing to be bought. And the reason I say that is this cluster of high volumes thing that happened in second, third week of March, from during which time it went from 140 to 170, and I'm just saying that there's some committed buying that's been happening around that time. There's been a lot of exchange of hands at 170, 180 in the second half of March, early April. Of course, if we knew who these buyers were, then it would be of great help, but anyway, that's not information we have access to. So technically, I would say watch this level of 156, 155, 154 for now, and if it does break, then a quick shot to 150. It could be an intraday trade, and on the other hand, on top, I think 165, 166 has become a good resistance. All right. Did anybody do the BHEL strangle that we discussed? Sorry, not the DLF. Okay, I'm assuming no one did. So, alright, so you sold the 180 call, so then you're sitting on good money. Okay, you can definitely let it expire. No one else has. Alright, fine. Okay. How much did you get for it? Alright, okay. Not bad. Good round number. But why not 170? Why do you do 180? Was there a reason for 180, 170? I mean, or 175? All right. Okay. 180 definitely safe. No doubts about it. I think all of us and the whole market is going to be very more than surprised if 180 does break this expiry. So just to be sure for everyone, the opinion on DLF is to be long for the multi-month time frame, and 250 is the expected target should 180 break sustainably and then go up, and there's absolutely no expectation at this point that we're going to go below 140. So that's one stock that I'm recommending a buy as it goes lower. Of course, all profits and risks are entirely yours. CE, he sold a call, not the put. Okay, so Dr. Reddy's pharma generally going pretty sideways, and something when we did the first LFT 3 weeks back, we clearly said get out of pharma, get out of IT. So pharma is at least on Dr. Reddy's side going down. You've got a nice downtrend in place. Did not recover at all with today's up move in the overall market, suggesting that at least Dr. Reddy's here has potentially further down moves to do, and 2,500 it didn't come there, is perhaps a place to watch out for, and then 2,464 would definitely not short Dr. Reddy's till it's able to go above 2,600 or 2,650. Okay. Gas Authority of India, well, continues to be in the symmetrical triangle, and everything including the indicators and the volumes are just completely sideways. The best thing to do is just stay away from this, let the breakout or breakdown happen, and then we take a call at that time. Okay, so gold has bounced back quite handsomely. I don't know if there's any wedding season or something coming by. Is it good to do a short straddle on GAIL? I wouldn't think you should do any shorting at all on GAIL, because when symmetrical triangles break out, then you can get some pretty good moves, and your straddle is probably going to give you a good loss. Okay, so I would just stay away from GAIL. Can't predict when the breakout or breakdown will happen, including can it happen in the next 3 days before expiry? Yes, it could. Right, so I think that's one just to stay away from. What you could do is a long straddle. So let's go back to Gale. Something to go and review is to look at buying the 370 call and 370 put for May. I wouldn't do it for April. I would do it for May, and if it makes any sense, financially, you could do a combination, which is you do a short straddle for April, but you must also do a long straddle for May, right? So in a sense, it's a covered strategy that if you do get a sudden move in April, then the May contract should bail you out, and the April contracts, if anything, will reduce your costs. So a short straddle only, I'm definitely not for it, but a short straddle along for April along with a long straddle for May is something that you could consider. These are the problems we are going to face. So maybe, I don't know, we're going to start looking at global markets earlier than we thought. So you guys better get your dollars ready. Okay. Before that, getting your dollars ready, get your heart ready. Everything is multiplied by 60. Remember that. Forget about the leverage on the contract itself. So it's leverage on the contract into 60, right? Okay. Grasim. So 2,850 significant resistance. As of now, 2,700 significant support. This is probably best to stay away from. We take a call much later, as and when it gives us levels. For those of us who are very intraday folks, anytime it comes to this zone of around 2,700 to 2,725, you could look at maybe taking longs, and that's with the view that these 200-day, 100-day, and 50-day moving averages are very unlikely to break at this point. Okay, so HCL Tech, are the results out? HCL Tech, does anyone know? So we know that TCS is out, Infi is out, and okay, so good results, positive result. All right, so positive result, but when was the result? Yesterday or today? All right, but the market doesn't seem to have really reacted at all, okay, to the so-called positive result. So really tough to know how to read this. So till, I think, the short term 1500, and then the real test will be whether it's able to cross 1575. If it can do that, then I think we review it, but otherwise, as of now, I wouldn't buy it. I wouldn't sell it either. Okay. All right. So definitely in a multi-year uptrend, but for the short term, sort of bearish. Could be, really forming a sort of base here, at least 6-7 weeks long, and getting ready for the next move. But this is only for really patient traders. HDFC. Okay, so the price index a whole percentage higher, so everybody is like now worried, and of course some banks have reacted, some stocks have reacted. Apparently DLF went down because of that, but like I said, Axis Bank did not. Did HDFC go down because of that? I really don't know. Okay, so I've always been skeptical about cause and effect explanations in the market. All we can say is that this 860 is looking like good support. I would not short this. I would look at whether 860 holds, and if it does go down, I would look for the 830, 835, 840 support, and after that I would seriously think about buying it. So this level, which is at 860, is something one should look at. So as you can see, from the second half of last year till now, it's been a significant resistance, and whether this resistance will now hold is really the question. So it's there. It needs a day or two more before one can be sure. You could actually, if you're going with the view that it's going to hold, you should be buying it at 870 levels if you can get it. Of course, the resistance will be 900, then 910, and then the life high of not the life closing around 915 to 920, and then a review after that. HDFC Bank, okay, so this is definitely showing weakness. Okay, the Nifty has gone up, the bank Nifty has gone up today, but HDFC Bank has not. That's really a surprise. I'm wondering whether this is on account of any results. So that's one big caveat for all the discussions that we are having. Till is that you need to track the results calendar and be sure that if you're doing any trade, you have taken into account any result of that stock or a related stock that might be happening during the time you're holding that trade. So please do not forget that. Write it down, paste it on your computer screen if you have to. So it's being moved out of the MSCI index. So basically what happens is the global investors who basically follow the MSCI index, it's a very popular index, will buy the stocks which are in that index. So if it's going off the MSCI index, the weakness is only temporary, I can assure you that. And after all the selling of this HDFC Bank happens, then it'll be back to business as normal. So being in the MSCI index is more a matter of prestige than of any serious price action. So if that is the reason one believes for the weakness, then you could consider reviewing the position in a day or two. It doesn't take much time for those fund managers to dump those stocks and buy whatever else. So if it's been taken off the MSCI index, is some other stock getting in, and is that an Indian stock, is something you can look at. Okay, so 700 is really good support on HDFC Bank, and otherwise mostly sideways till 760 on the top side. And here's one thing: there's a huge amount of support zone at lower levels. So these are again not setups that you like to short. If they are going down, you just let them go down. Don't stand in the way. Don't think about doing shorts. Don't do anything with options either, I would say. Suddenly you'll see a reversal. Just let them do their thing, and then in the longer term, for the last like a year and a half, really not done much except that it made a new life high. So from that, and it was able to do that, nothing on great volumes, but nevertheless you had higher volumes. Why I'm pointing this out is technically you've got great support at lower levels. The buying has overall in the last 2 months happened on higher volumes, so you don't want to be against the trend. Lower level should be looked upon as an opportunity to buy, and definitely no shorting in this at all till then. All right. Okay. Hero Motors. Okay, so this is let me just open this. Hero Motors is looking very different from Bajaj Auto. Let me just get them side by side. Okay. Okay, so both of these have the same time frame. So Bajaj Auto actually made a new life high, you know, in December, and then sort of lost the plot. This one made a new life high in early 2012, or multiple life highs that's come out there. So the reason I'm saying Hero Motors is looking better is that it's been able to now achieve that better, while Bajaj Auto has not been able to get back to its life high. So if I were to go long, it would definitely be Hero Motors and not Bajaj Auto. So zooming into Hero Motors, you have the situation where while the market corrected a lot in the last 2-3 days, the only 1 day's correction and then trying to go back up. Some level of consolidation going on at this part, at this price of around 2200. Again, see if the results have been declared or not, but around 2100, 2150, good support. And if it can stay above 2230, 2250 on good decent volumes, then 2350, 2500 is definitely a possibility. Hindalco, in my opinion, okay, once it broke this 130 level, it was a buy. So that, again, to reiterate, that 130 level is a multi-year support resistance, and it should really not be sold. So yesterday also you had a green candle, today also you had a green candle, Monday was the only red candle, Tuesday. So once it breaks 145, it will clearly go to 150, but anything till 130 or 135, 128 are buying opportunities on Hindalco. Definitely would be recommending a positional long on the stock. Buy in demat, or if you can, then hold futures for several weeks. Just sticking with Hindalco, for those of us looking at a safer strategy, you should buy the 140. You could buy the futures and say buy the 135 put or the 130 put for the whole of May, of course. So I'm talking about May contracts. Can anybody quickly check how much the 130, 135 puts are and what the lot size is? They're pretty expensive. There's absolutely no doubt about it. But that's the cost of insurance. And so two things. One would be the results, and the second part would be the elections. I know I'm repeating it, but it better stay there. Otherwise, good amount of money at stake. So be on the side of the trend. The trend is up. Therefore, buy Hindalco. The problem is the events, and one needs to find a way to protect oneself from those events. Okay. Hindustan Unilever, so 12,000 bucks is your cost of insurance. I don't know, you decide whether that's worth it or not. Okay, can't do anything about the price. Okay, so Hindustan Unilever. So we said the FMCG index was showing some strength. ITC was, we'll come to ITC. Hindustan Unilever sitting above 600, but really nothing to say anything about that level. Iffy candles, could go up, may not go up. Buy it above 620, or again, shorting this is a problem because you've got lots of support at lower levels. If one wants, buy it around 600 with a trader's stop loss at around 595, 594, with a trader's target of 618. These are all spot levels. and if it can clear 620, then well, 650 is easily achievable. ICICI Bank, wow. So HDFC was down, HDFC Bank was okay, so Axis Bank was sort of up, and ICICI Bank is strongly up without any correction in the last 2 days. So signs of strength. I don't know if the results are out of ICICI Bank, but this is potentially one stock worth considering. So the CPI and all that made no impact on ICICI Bank, and banks are supposed to be the most interest rate sensitive stocks. So sometimes these things just don't work the way theory says they will. 25th April. All right, so that's after result. Okay, so it's after the result on 25th. Well, I guess we'll have a LFT on that day, but the result will be out by then. Okay. 1250 could easily break, and again, very important level, and if that breaks, then I think 1450 is definitely on the cards, and after that this stock along with HDFC Bank starts to go into a different zone altogether. Okay. All right, definitely no shorting. 1200 is excellent support. IDFC, so IDFC is no longer in favor of the market. Once the banking license results came out, it was it's when I say favor, the whole fact is discounted. So banking news is no longer a thing, and that event risk is definitely out. This was around the time, big huge gap up and then just cooled off, and it's been going down. I think once it comes around 115, 112, it could become a good buy. One thing about IDFC going forward the next 12 to 15 months is that there will be a demerger. So the way it's going to work is that the current assets and liabilities of IDFC, which is into infrastructure financing, etc., will be put in a separate company, and whatever capital and the setup and the operationals and the people for the bank are going to be set up in a separate sort of division, and then these two divisions will be demerged. So you're going to get, let's say, IDFC Bank, which is going to get created, and the IDFC as of now, which is going to continue with its current business. So this is from a fundamental thematic standpoint. You should buy IDFC stock in your portfolio on your spot market and just hold on to it, because the demerger is going to give you one baby company, and that's at no cost to you as an existing shareholder. And then over the next, who knows, several years, the IDFC Bank could theoretically do extremely well. If you look at all the private sector banks' stock price performance after the time they list, and if you take it 5 to 10 years forward, they've given some excellent returns. So this is definitely not for traders. One should perhaps look at accumulating as much IDFC as one can in your demat account as it heads down. So maybe start an SIP. I generally don't recommend SIPs, but start an SIP in IDFC and just buy it for the next 6 months or 1 year, or at least till they announce the demerger, and then you stop. Right? Of course, the superior way is lump sum investing, but then for that you need a correction, which will happen. And remember that the IDFC has to meet the RBI obligations. I think they've got 18 months, 1.5 years. So it's nothing that's going to be, rush. I'm sure there's craziness inside IDFC. And yeah, where's Vidya? You'll probably go there and make double your salary from where you are. Okay, so yep. So this is about IDFC. Technically, I would say 112, 110, 108 would be excellent supports to consider going long. IndusInd Bank, okay, so how come ICICI Bank did not go down and IndusInd Bank did, and that too there's a gap there. I don't know if there's any news, nothing that I'm aware of. So close to its life high. I would short this only if it breaks 480 for a quick shot to say about 463, maybe 450, but safer to go long. First target 520, and once it crosses 530, then 550, 600. Of course, check when the result is. So Infi continues to sort of just drift down after the results. Nothing new in the chart itself. The chart just continues as though nothing really happened. This was the results day, Tuesday, spiked up but could not hold anything. So 3100 is basically the level to watch out for on Infi, and I think it's headed there. Today's green candle, no inspiration at all in terms of bullishness. So 3100, and at that point we review, and it could do very well after that. Very well on the long side, I don't know. Okay, but if 3100 breaks, there is excellent support at 3000. Look at this zone here. Okay, so let's put that 3000 mark, and if it breaks that, then I think it's going to quickly come to 2800. To say it won't have, Balti is saying, is it good to write May calls for Infi? It wouldn't have an impact on the election result. Remember, the election result is not stock specific, it is market wide. So if the market were to gap up 10% or 5% or whatever, then Infi will also gap up, but of course not much. But so if you're writing your May call, it really, if you're looking at 10% from here, 3,100 plus 300, 3,400, 3,500, 3,600, sure you could, but be prepared for a quick loss of profits on 17th or whenever. Of course it might then cool off again and come back down, but that's a risk that you have to think about taking. So what could you do? Maybe you could write off the 3,400, 3,500 call now for May, all right, and then on 15th, that's one day before the elections, or on 15th or 16th, whichever is the working day. So just getting the calendar up. Yeah, 16th evening, or let's not. I don't know how the election announcement schedule is. So let's say 15th evening to be safe, right? On 15th evening, you could just buy a call to protect yourself, or get out, and whatever money you make till 15th, you make till 15th, right? So okay, so otherwise let's do this. Go write the 3435 call, and we'll review this anyhow. There's going to be more LFTs along the way, and we'll review this and see what you need to do with that position. So yes, maybe you could consider writing the calls for Infi, right? Good point, right? So especially all of you in the mentorship program, remember to discuss this when we meet on Monday. Okay. All right. I think the 3,400 call as of now could be something, could be quite safe to write. How much is it? Quickly. And the lot sizes. sec, I think I have it. Yeah. Okay, so it's about $5,000. Why not? Okay. All right. Yeah, 5,000. Good. Not small money, that's for sure. Okay, so ITC big bounce last 2 days. Basically has taken excellent support on the 50-day exponential moving average. Jumped up to 350, 353, but not on volumes. Right. So that's a bit of a concern. If it crosses 355, then one can go along with a stop loss below 349. First target would be around 362, and then after that at 370. So that is ITC for you. Um, I would suspect there's something cooking in ITC. So if that somebody can make a note of that and investigate this further, that some news, some announcement, some maybe result or whatever is what I'm suspecting. Okay. Jindal Steel. So metals, we've basically given a heads up. But Jindal Steel is not something that has really, been able to sustainably stay above. But it's trying. There's absolutely no doubt about it. Slight pickup in volumes last 2 months, and as of now, I think the 260 levels and the 300 levels are what one should watch for. I would basically recommend a buy on this. No questions of going long, and just patiently wait. I don't think this is a short-term. If it's a short-term trade, it's pretty risky. You can see the size of the volatility on Jindal. So easily 15 rupees in a day, one way or the other. So be clear that you're going to have pretty significant mark-to-market moves if you do futures. Otherwise, go ahead and buy in the demat account. All right. JP Associates. You can very clearly see significant volumes last 6 months, 6-7 months. I would think that this still has some upside left. So from 60 it's come to 55. Very, very unlikely that 50 is going to be broken at this point. Just want to point out something. I'm just taking this back. Okay. If I were to leave this here, what does this look like? Which chart does this look like? Exercise for all. Which chart does this look like? I know it's JP Associates. Which other stock does this chart look like? Anyone? People are either hungry or gone to sleep. Okay. So if you go and look, this looks like DLF, except that DLF broke down, and this one has basically broken up. So I want you to see what happened after it broke up, okay, which is it broke 50 and then it went to 60, which is clearly a 20% gain, which is exactly what would have happened in DLF, but it broke down. So a few lessons. One is, if you're looking at, when you're doing technical analysis, the sanctity of trend lines, and if you can track the trend lines, clearly put alerts, then on the DLF breakdown you would have been notified, or if you were watching the stock live, that's fine. But if the breakout had happened as we were actually anticipating, which obviously did not follow through, then this is a sort of move that could have also happened, a 20% move. Now 20% JP Associates not entirely very different from DLF, remember that. Both in infrastructure, sort of, both in reality, definitely. And had DLF broken out, that's the sort of move that you could have seen in about 3 to 4 weeks. So you have, this is again going back what DLF looked like 3 days back before the breakdown. And on the day of the mentorship program trading session we had last week, you remember what happened. So this is about, seeing how the same similar pattern has behaved in 2 different ways, and also looking at if and when moves happen, what is the magnitude of those moves. All right, so that's about this. JP Associates, I think 50 is fantastic support. When it comes to 50, for any reason you should definitely buy, and at about 52, sorry, yeah, 53, good support. If it happens to come to 50, then buy more, and no question of shorting it. Kotak Bank, all right. So Kotak Bank is making new life highs. Absolutely no doubt about it. Let me get rid of this. So stuck in a range from about 600, 625 levels to 800 levels, and is now attempting to go up, but definitely not on good volumes. So question of it's more a question of when it will go up, not if it will go up. So Kotak Bank should only be bought at lower levels and then just held. So 810 now becomes an important resistance. That's the new life high, and okay. So on every dip, buy. If you come to 780, buy. If it crosses 810, buy. How do you want to implement this? Really up to you. But I think its next natural target is 850 and then 900. Okay. Not such a strong recommendation on, let's say, a longer term time frame. On the weekly charts, it still needs more push. But again, truncated week and stuff like that. So it's going to take some effort. And again, I know for the nth time, but sorry, election results. LNT. Okay, so LNT sort of creating a small rounding top, 1250, could easily come down to 1150. Huge range of support from 1050 to 1250. That's 1200. Sorry, that's pretty wide. It's just a question of when it will move. Again, probably to the upside. If anything, on the downside, 1130 is where you should really concentrate if it comes down. Another lesson in LNT, in this zone where it gets so tight, concentrated, Bollinger Band squeezes, moving average consolidations, and all of that, it can test your patience really long. So if you take mid-Jan to mid-Feb or even late Feb, that's 4 months of doing sort of nothing, and pivoting around the 1,000 rupee mark by about 25-30 points. And if you had two small stop loss, you get whipsawed in and out of the trade and completely zonked a very long period for quite some time. But then finally it moves and it starts to move in the third week of Feb, and then from 1000 it went to 1250. Even on the spot market, if one was holding this 25% return, I mean, why wouldn't you be happy, right? So what I'm just trying to convey is patience and looking for a nice setup, and then just hanging in there can pay some really handsome returns. Okay, so LNT, wherever it goes down, if it does, then till I think 1132, but I would definitely look at more going long on this rather than short. Okay, so don't short LNT. Lupin, okay, so definitely looking healthier than Dr. Reddy's, but stuck at 940. So 940 to 1000 is where Lupin is, and one can take a call only after it crosses that. I would say consider the 1000 May call. It's out of the money, should be cheaper, and could give you some decent return. So let's quickly look at that. Okay, I think your liquidity is going to be an issue. Okay, yeah, not much. So 1000 rupee lot size, and forget it. Really sorry. Yeah, get your dollars ready. There's no liquidity at all. So really nothing that you can do. And look at the bid-ask spread, huge bid-ask spreads. So you know what, 1000 bid-ask spread is 20 and the ask is 29. Go put an order for 20 rupees 10 paisa. That's a lot of money. It's 20,000 bucks that you're going to pay. Not sure whether it's worth it, but it's just too expensive. Okay, so that's Lupin. M&M 970 on the lower side, clearly that's the level to watch, and 1020 1020 on the upside is the resistance to watch. Sideways stock, maybe even a symmetrical triangle. Okay, so that plus well, not really textbook diminishing volumes, but anyhow volumes below average, and very often that's all you'll get. So again, watch for the breakdown, and then you can take a call. So on this again, you can do what we had discussed earlier for GAIL, the 1000 short straddle for April and the 1000 long straddle for May, and see if that is something that's affordable to do. Okay. Okay. By the way, all these approaches that we're discussing, strategies, are not just one-off strategies, and what I mean by that is we'll keep reviewing them as we go forward. So especially all of us in the F&O group right now, you know that we are looking at repair strategies, defensive strategies, etc. And these are things that you do over several weeks and months. These are not things that you fix and get over or make a lot of money on a day or two. You might, but then that's not really the way the strategies are designed or will work. So that is something that you should keep in mind, that these are not just one-offs, that eventually we would end up modifying things, and then as long as we are making more than losing, that's really all that matters. Okay, so what I'm saying is these are more or less long-term sort of multi-month views that are there. I might not be explaining everything in detail because of wanting to finish so much in a short period of time. But just keep that in mind, that these are things that the view is now, this is the strategy now, and we would modify that as we move forward depending on how the market moves in our favor or against our favor. Maruti, so clearly Maruti is making new life highs again, and is probably expected to make good moves going forward too. So as of now, okay, so this was the big time when they made those announcements, and then from 1600 it's come to 1950 in a matter of 2 months. See how much can change. What looked like a big deal then is not a big deal now. But 2000 is the level to watch, and that will be another milestone that Maruti reaches, and then is probably going to go up even further. So that's Maruti for you at 2000. I would not look at shorting this at all. Again, plenty of support on the downside. Comes down, buy. Sideways, again, whether the annual results are out or not, that's something that you want to check on Maruti. NMDC, so this has not only broken out of 2-year downtrend, but for now has been sitting above a very significant resistance of 145. So from a positional perspective, I would definitely recommend buying this for a long-term portfolio. Very good support on the downside. Once it clears 155, then NMDC will go much higher to perhaps 170 levels, and then probably struggle there again, and then go to the 190 level, struggle there again for some time, and then come to the 200 plus zone. Okay, going to test your patience. Look again, once it comes to a level, weeks and weeks and weeks it just spends there, and you're wondering why you're not in some other stock at that time. So Nifty we have done, VIX we have done, and then there's NTPC. Okay, so I'm just going to take a 2-minute break. Need to drink some water, and then we will start again. So is there a pause? Yeah. All right, so I'm back in 2 minutes. So if you need to take a break, just go ahead. Okay, I'm back. Is everyone here? Can you hear me clearly? Please confirm. Okay. So we're looking at NDPC now, and one dull stock, but once it took off from the 114 levels, has gone up. Lots of resistances all the way till 135 on this stock. So don't expect any quick move unless some news or something like that happens. So could go up. Broadly a weak stock, and it's not something you want to go long on, but you could definitely look at buying it, and it could 135 is a strong resistance, and then 145 is fantastic resistance. Balki was talking about selling calls. Well, I would say look at the 135, 145 call for May. Might end up making some decent amount of money on that. We could look at the 135 call and maybe even the 115 or 110 put. So they're pretty wide, but possibly some decent money. Of course, liquidity could be a big pain. ONGC, so just drifted down, sort of a sideways consolidation, but then when it does that on high volumes you wonder. But 310 is definitely good support for NTPC, moving more or less in tandem with the market. And just to hit the message home, I think we had mentioned about this 300 rupee strong resistance, and again when it broke out of that, it went from 300 rupees to 330, or even if you say 320, 310, good 3 to 5% return that we made. And then it's possibly going to go higher in the longer term, but as of now 3098 is excellent support in my opinion, and then around 325, 330 you're going to get a cluster of resistance, and then after that it's only 350. Punjab National Bank, so look at this. It's probably one of the largest banks. We don't hear about it much in South India, of course, but after SBI, PNB, Bank of Baroda, these are like pretty large ones, and no impact of CPI and all that stuff, the inflation thing. So this has gone up from 550 to 800. That's a handsome move of over almost 50%, close to 50%, and as you can see, it's just done that in 6 weeks. Now it's consolidating. There are really no two ways about it. It's consolidating, and the consolidation could take a pretty long time. That much I can assure you. It could take several weeks. But once it's done that, then it's going to itch to 850 and then 950, at which time we shall review what it does. Okay, all right. Power Grid. Okay, so broke that 100 mark, went very quickly to 110, 10% move in the stock, and probably consolidating again, though that's going to be tough to see on this because of that volume spike there. Yeah, it's consolidating again. 105 will probably be a great support for it. 110 is the resistance. One could even okay, you have the Okay, so there you have the level to sort of levels to watch rather. It is consolidating and then either it's a breakdown or a breakout. Ranbaxy next. So this is another stock which is consolidating. So you had that Sun Pharma Ranbaxy thing, news about insider trading, some SEBI investigation going on, but at 468, very tight consolidation. These are high risk trades. If anything, you should just stay away from it. And of course, Ranbaxy is fraught with all sorts of news and event risk and all that. So, let's just move on. No point being stressed out on a high risk one where you can make, whereas you can make probably the same amount of money in some other place in a safer way. Reliance Industries, so there you had the head and shoulder top, which tomorrow is Reliance result. Alright, wow. Tomorrow is Friday. They're declaring on a holiday, normally declare on a Friday only, I think. But so Good Friday. Yeah, so Good Friday, maybe good result, who knows now. Obviously the markets are closed and there's nothing we can do about the Reliance result till Monday. So whoever has taken a view has either decided not to trade or has gone in and taken a directional view. So you know what, it's just a waste of time to discuss it when the result is tomorrow. But depending on the result, it's a gap up at 970, 980 or a breakdown at 330, 320. One of the two ways is what Reliance is going to do. So we'll just wait for the result and see. Then Reliance Infra, well, surprise, I didn't expect to see a strong bullish stock here. The infra space itself is doing quite well. But when I say strong bullish stock, what I mean is that there's no sign of weakness in the last 2-3 days when the overall market corrected. And today when the market was steady and good, it's gone up. That's a sign of strength. So, the infra space, he said several weeks back, is something to really look at. And this is evidence that things are paying off. So it's gone from 350 to 500. And it's just a matter of time, I think, that you're going to see much higher levels on this at 550 and maybe 600. Then we have SBI. So 2000 plus now, and holding on to that. 2150 would be the next result. There is, if you said, if you wanted to, since SBI is such a heavyweight stock and a large stock, if you were looking for the similar head and shoulder pattern that we saw in Reliance or Bank Nifty or the Nifty itself, well, it's got a very twisted and a very steep up sloping neckline. Just not sustainable and mostly a sign of strength. So I think this is another thing that will probably move up. Anyone knows when the result is, that's something that would be useful. So 2000 and higher is what we need to consider. Okay. Okay. SSLT, sorry, I keep forgetting to merge the old Goa with this, but actually they're different companies because Sterlite got merged with this. So this is not doing much. It's just range bound between 175 205. I'd say forget about it for now. We'll look at it when it breaks one of these two levels. Okay, so Sun Pharma. Okay, so Sun Pharma is sort of a triple top. This is a nice consolidation that happened here from September to Feb, and then now another smaller consolidation. Can't see much in the volumes in terms of consolidation. Okay. So this is probably after the when Baxi results. So 650 has to break basically, and 580 on the downside is also the level to watch out. So probably go up. If one wanted to, then high risk strategy, because again event risk is there. So two things. So the strategy is 650 call buy and sell the 600 put May. Both of them are May. So since it's bang in middle of 625, the cost should basically balance out, and what you have is a synthetic long stock at zero cost. If it works out, you're going to get a insane percentage return, one of the highest you'll ever get. But if it doesn't work out, then you have to protect your 600 put very carefully with a stop loss that you put and watch every day. But this is great in between. So the 650 or the 600. Sun. What's the symbol? Yeah. Okay, forget it. Sorry. No point even mentioning it. What do? You just feel so hopeless. Now this is going to a point where you've got you don't have contracts for May, you're going to have contracts for June, is it? Oh, sorry, I put June. My fault, I apologize. Not much open interest anyhow, but okay, 620, 630. So let's say you buy the 630 call, you're paying $30 LTP, and the 620 put, you're making what's the LTP? There is no LTP. There is no open interest in it. You'll be the first guy with it. Okay, so yeah, it'll be around the same thing. So see, track at least, learn a lot. Track. At least we learn, and when the market is ready for us, we'll be ready to take the market. If that ever happens. Okay. So that's Sun Pharma. Bullish overall, but unfortunately no really great strategy that one can implement. You could buy it in the spot, buy futures, and when the puts become available, protect it. You could do that also. Tata Motors just makes another life high after another life high after another life high. I really don't know what's happening in this stock. I mean, sales are down, but something is, of course, we're looking only at domestic sales. That's the problem. Just imagine if local sales were to revive and the Indian economy and the auto space was to revive, where will the stock be? Could be at $1,000 for all you know. So this is another stock that needs to be bought. There's no question of not buying it. 400, 405 excellent support. Then after that 450, 500 is where the next resistance is. Tata Power. Okay, so little shaky. The stock is looking, but 90 is what it needs to break. So, and it could do that. Okay. It's going to take a lot of your patience, but for now, very unlikely to break 80. 85 is 85, then 90 would be the levels to watch. And once 90 goes, then 100 could happen very quick time. And remember, from 90 to 100, it's not 10 rupees, it is 10% return that you get. Okay, so yeah, good possible buy. Tata Steel, okay, Tata Steel, big fat resistance at this level, which is at around the 420 mark. Huge multi-year head and shoulder bottom. So when this breaks, again, it's not a question of if, it's a question of when. Then your measuring implication takes it to around 600, 650 zone. So that's a 50% move from here. So just buying it on the spot also is going to be a great thing to do. Okay, so yeah, there's nothing to do except buy it. You can again see last 3 days when the market corrected a bit. This did not. 400, 405, great support. Just buy it and be very patient. Short-term traders targets will be 445, then 495, and that's all. But this is something that you would play for the long term up to 600. Yeah. TCS, okay, so is TCS result out? It was supposed to be out. And so HCL Tech was a very good result. And what's the opinion on the TCS result? It's good. All right, so it's a positive result, but stock doesn't react. So the non-infy stocks reacted after infy. I don't know if the market knew something. It probably did, and they've already went up on Tuesday. On Wednesday they corrected a bit, and then today, result no result. You're getting a doji almost. So nothing much. I would say just setting itself up for a potential up move again, but the rupee is something to watch out for. Modi is something to watch out for. Would not short it as of now, but around if it goes to 2350 and above, then 2500, 3000 will become real possibilities. But these will be something that you really need to be patient with. Okay. Ultratech we did, and then Wipro is the last one. So Wipro again threatening to make new life highs. We've been talking about Wipro quite a bit in the past, and we said the company's gone some sort of a restructuring. It's become stronger, better, more efficient. I don't know if more efficient, but definitely more focused, and seems to be paying off on those parameters. And once the 600 mark goes, then 700, 800. So maybe that call that was given on IT stocks 3 weeks back about getting out of them, it's time to revise that and say these are potential buys again. The only significant risk, I think, being that if depending on the election outcome, the rupee's behavior, and if the rupee really shoots up or becomes stronger and goes to say 50, then all these stocks will stand to lose. But leaving that aside, these are probably buys, and once 600 goes by, it gets cleared, then you should definitely look at buying it. At this point, just want to introduce these wonderful charts that Vidya creates. This is on TCS, and since the results are out about how TCS has behaved, so let me just go to this first or okay, fine, let me just go back to what we were looking at. And what you have is these are the strike prices: 1900, 2000, 2100, 2200, and the bars are dates. So this is the open interest and the open interest change that has happened on each strike, and this is on the puts. Okay, so you can see that after the result, so this is for today, the 2100 and the 2000 puts have had a significant decrease in open interest, the puts. All right, so what does that mean? Right. Also, let's look at calls first. All right, where is that? All right, so this is the change in calls. It's a lot more a little erratic, but the blue bars are what you're seeing, which is today. So if you just concentrate on today, the 2200, 2300, 2400 calls have seen a big drop in TCS. Okay, so just putting the TCS chart back. Okay, so the result is over. There was some build-up that happened, but after the result, what you're seeing in this chart is that the higher strike calls have actually come down. But again, this is, we are looking at, Vidya, correct me if I'm wrong, but we are looking at April, right? So we are not expecting the expectation of the market is that it's probably, if it goes up, these are the call guys basically closing their positions. And if you look at this, interestingly, 2200, the positions got reduced even before the result. So a sort of bullish bias that is happening, which is that the what do you say? The expectation of the market is that the TCS could further move up. However, the caveat is that these are probably only April strikes, Vidya, is that correct? And sorry, April contracts, and if you looked at the May contracts, we might actually see a different situation. So maybe, Vidya, that's something that you could perhaps generate and see how the change in April versus May, and if they both are in sync or they are out of sync, and who knows, we might then have a different view on the stock. Okay, so it was really interesting stuff. Hopefully, the other thing to do is also generate something where we combine near month and middle month OI for the same strike, and then see how that were to go. So there will be actually 3 sets: the near month, the middle month, and the combined thing. Maybe that will give us some more insight. Okay. All right. So I just wanted to introduce these charts. There's a huge amount of information that can be, generated and analyzed from these, but these are things that we will have to work on moving forward. These are probably new to some of you here, so I don't want to get into too much detail because it's going to take a little bit of getting used to reading these, right? So my thanks to Vidya for this. There is another one which is on Wipro. So if you look at this little more okay, I hope that's clear. A lot more erratic and a little more difficult to read. You're seeing the 600 calls have risen significantly, 610. So at least for the next 3 days, 4 days, significant upside resistances, and on the lower side the calls have disappeared as the Wipro stock has moved up. So all in all, adding to the bullish picture. And here you have seen the lower strikes increase significantly. They're just taking money home, the writers basically. And this is a surprise. I don't understand why the 600 and the 620 puts would have just suddenly, jumped up like this. But all the action is in the 550 to 580, a bit on the 590 mark, and where you've seen a significant increase in open interest on the puts side. Okay. All right, so great support on the downside, and the resistance becoming thinner on the upside, which is very, very clear on the Wipro option chain. But again, like I said, this is only April. We need to look at May and get a deeper insight, or a further insight which is 4 weeks longer than this. So this is a 3-day view. That's a 4-week view. Okay. All right. So great. Coming to the end of the webinar for today. If there are any questions, please put them up now. Otherwise, we have finished all the 50 stocks. I am not remembering some of the good ones, but I think BPCL long, TCS, Wipro long, potential short on Infi, and then we have those straddle strangles on, I think, Sun, Gale, and then your stocks like Tata Steel, if it breaks that 2-year resistance, LNT, these are the ones which we look at going long. I don't think we found anything which was a significant short, if anything. Done. So that's it from my side. I am waiting if there are any questions. If there are none, then we shall wrap up for the day. Have a great evening, what's left of it. And you have Friday, Saturday, Sunday. So I hope all of you are taking a break. I know some of you are workaholics, but do take a break, have fun, and we'll catch up on the LFT again next weekend. So I will hang around for any questions if there are any. Otherwise, the LFT is now over. Thank you very much, and good evening.